Influencers seize opportunity when others shrink from it. Alan Patricof has done that time and time again for decades. Over 50 years ago, the venture capital pioneer won big on an early investment in New York Magazine. He later made even larger bets on Apple and AOL before either company was a household name. He also founded private equity giant Apex Partners, which has raised funds to the tune of $50 billion and opened offices around the world. And recently, he's helped launch digital successes like Venmo. Alan is here to tell us where the economy is going next and which companies will thrive in it. Hello, I'm Andy Serwer. Welcome to Influencers and welcome to Alan Patricof, founder and managing director of Greycroft Partners. Alan, great to see you.
Thanks for having me.
So I want to talk to you about the venture business, of course. You are one of the original venture pioneers, I guess, in New York City, certainly, and ask you how the business has changed. Give me sort of an update of where things stand right now.
Well, I think the major thing is when I got into the business, it wasn't even called the venture capital business. It wasn't legal for institutions to invest because they had, the ERISA hadn't passed and didn't have the rules for how you do private investing. And rather than being inundated with deals that are, on an average week we may get in New York, I'd say maybe 100 new deals a week. In California, we probably get half that many, another 50. I mean, you think of that, it's a staggering number. In the early days, in 1970, when I started Alan Patricof Associates, there were 2 deals a week if we were lucky, or maybe 1, or we had to go calling on people and knocking on doors to convince someone that they ought to raise money privately.
It's so competitive, no, Alan, and there's so many people in the business. How do you differentiate Greycroft? What's your secret?
Well, I think that, to a certain extent, my having been in this business a long time does give a little bit of a, I don't want to say halo, but we're not newcomers.
So you have expertise that others don't have.
Yeah, plus I've put together with co-founders of 2 young people that I brought in when I started in 2006, when I restarted a new business. And we have developed a team of people both here in LA who have, in their own right, have developed very strong reputations, and we're, immodestly I will say we're probably one of the top firms today in the venture business in New York and Los Angeles. When I went, I deliberately avoided San Francisco because I knew if we went to San Francisco, we're going to be number 50 or number 100, and it would be very hard to develop an identity in that part of the country, of California. In Los Angeles, we really almost are a pioneer in starting venture there in 2006.
So you are thinking about differentiating the firm that way?
Yeah, I mean, you got to do something different, and we have some very interesting rules. I don't necessarily need to go into them, but that distinguish us is that we are focused on being a pure venture capital firm. I started Apex, Alan Patricof Associates, in 1970 with $2 million. And we grew over the years, as it's almost now, Apex is $50 billion under management. But as we grew, we morphed from venture capital into private equity. I mean, it's inevitable when you have a fund of $10 billion, you can't do $1, $2 million investment. Greycroft distinguishes itself as being by definition, we're keeping the size of the fund. We're very disciplined, and that also disciplines you in the size of the initial investments you make, and it disciplines you in your expectations. When we started Greycroft, we had almost on our credo that we did not expect to sell any of our companies in an IPO, because the IPO market has been dead for the last, we were prescient, because after 13 years, we haven't sold one of our companies in an initial public offering. We've sold a lot of our companies to public companies, but we haven't gone IPO. All of our sales have been in private transactions.
But wait, so that just doesn't work for you guys right now? I mean, because there are IPOs.
Right now, no, yeah. I'm saying we finally, no, I just was being realistic in expectations, because if you if you don't expect irrational exuberance to take you out
Right.
at crazy prices, you better invest at a realistic valuation level going in, raise a realistic amount of money that you can utilize as a company, and be able to make a venture return at, you know, $100 million sale or $200 million sale, not requiring
I see.
being a unicorn to make a return.
Right, right, right. Along the way, Alan, you've invested in Apple, AOL, Huffington Post, Venmo. What did you see in those companies, and what do you look for?
Well, in all these companies, you're looking for an all-star cast of people, not just an entrepreneur, but we found that the best criteria is an entrepreneur who started a company or was running a company or built a reputation in a business and then decided to do something else tangential. And the key ingredient was that several of the people he worked with followed he or she into the next activity because they were voting with their career, they're voting with their feet, whereas we're voting with money, which is, you know, somewhat still an inanimate commodity. So it tells you a lot if, you know, someone picks up from, you know, the New York Times and goes and starts a whole new publication. You know, we were the founders, major shareholders in Axios, the newsletter, and it was made up of the team that left together from Politico.
Right.
And that has a lot of credential as opposed to someone walking in off the street and as a lone wolf.
Not everything worked out, I'm sure. What did you learn from your failures?
We have too many failures, unfortunately. That's the nature of the business. It's always people. You can change, if you have the right person running something, you've heard the expression pivot. They can pivot, they can improvise, they can do a lot of things that can deal with the product. If you have a product without a leader, without that charisma at the top, without a founder who's got that, is driven, it's a lot harder to move around. And, you know, truthfully, I personally prefer that we can be in companies where the founder is the person you stick with and you build around, as opposed to someone who comes in after the fact. And when you have to change founders or you're backing a deal where the person isn't necessarily the founder but is taken over from something else before, that founder passion is a hard thing to replace.
So that's almost, or it's as important as the company and the core strategy itself?
I think it's more important.
More important.
The people are the key.
You're interested in digital media. You have been interested in digital media.
Yeah.
Still interested? Seems like the bloom's off the rose.
Yeah, I guess there are a lot of people who would agree with you. I feel like I'm pushing a string uphill sometimes in my own office. We've moved a lot away from the media, advertising-based companies.
Why is it not any good anymore?
Well, one major reason is Facebook and Google kind of have taken over the whole ad industry. Their share of market is crazy. I mean, between Google, Facebook, and you can throw in Amazon,
right,
which also is now selling ads. It's hard to believe. Amazon was more than double last year in their advertising. They did $4.5 or $5 billion, and they expect to double again this year. And so between the three of them, they have 2/3 of the advertising, online advertising. And if you take out Amazon, you're taking a little bit out, certainly much more than 50% from the other two. And if you take the share of Google's social interaction between the sites they own, if you take the percentage that Google has from YouTube and what percentage of search they have, it's astronomical. And so it's discouraged people that have anything that's an ad-based business, and it, you know, hurts ad technology. The ad tech was a big part of our early portfolio. We had a company called Buddy Media. It sold to Salesforce maybe 6, 7, 8 years ago and did extremely well. That you couldn't have a Buddy Media probably emerge today. You wouldn't get that kind of valuation today. It's a much tougher business to be in. But there are, like Axios. Axios is knocking it off the chart.
Subscription businesses are
It's
okay?
not subscription yet. It's all sponsorship based, but they're offering something unique. They've also created a whole bunch of verticals, as you probably know, and not just in politics, but in finance and health and in security. And we've also gone into the podcast business. I'm very high on the podcast business. We have a company called Wondery out in Los Angeles, which has at least two of the hottest #1 podcasts, Dirty John and Dr. Death.
Wow.
Are very interesting narrative serial programs, and it's more content. We're like a little bit like another company that Spotify just bought called Gimlet. And I think the two of us are probably the leading content people, and I would venture to say that a year ago, Gimlet may have been #1. I tend to think that we may be hot on their back and maybe #1 in terms of the success of some of our recent programming.
Seems like you might think that Facebook and Google have become a little bit too powerful.
I would agree with that. You know, some people might even call them quasi-monopolies. You know, our definition of what's a monopoly and what's anti-competitive maybe has to change from what it was in the early 1900s when we, you know, passed the original acts to protect businesses against competition, against monopolies.
What do you think about the streaming business, Alan? I mean, Apple just announced a whole endeavor. You've got Disney getting into it, Time Warner, part of AT&T, NBC, part of Comcast. There seems to be a rush into that.
Well, having a son who makes movies and lives in Los Angeles and is a successful independent producer, there's an awful lot more places that he can sell his content. But aside from that plug personally, but you know, content is still king. Interestingly, going back to Wondery and Dr. Death, it was bought by Bravo, and Bravo used it, made a series out of Dirty John.
Is there peak content, too much content? I mean, there's certainly a lot of choices out there for consumers.
Yeah, it's to me, frankly, I find it overwhelming. I have so much on my to-do list or my stuff that I want to look, I want to watch. There aren't enough hours in the day. I can stay up just so late at night between watching political shows and watching what I'm missing on Netflix or whatever. I'm watching a show right now called Call My Agent, which is a kind of a French, it's a French program in subtitles, but it's all about, you keep thinking of CAA or WME as you're watching it. But it's French version.
But it's hard to keep up. I mean, there's just so much stuff.
Oh God,
right.
You know, you get hooked on a series, and everyone you meet will tell you you've got to watch this particular series.
Right. Besides digital media, are there other areas that you're keen on right now?
Yeah, well, I think that the software will always be with us, and we're always looking for interesting software companies. We're looking for database companies, anything that has a proprietary position. You know, I always keep reminding myself of Standard & Poor and Moody's, where you had to have Standard & Poor every single year. You couldn't be in the financial business without it. Well, that's a nice thing to have, a subscription-based business and building data all the time. We have a company called App Annie, which is I would say, the modern-day version of what Standard & Poor was. They are the authority or the access for all information about apps. So if you have an app, you want to know what you're doing, how well you're doing, who's doing what to whom, what your competitors are doing. You have to subscribe to App Annie. I mean, there are probably others, but we tend to think that we're the best and the biggest. And that's a very comfortable. We're also very active in the direct-to-consumer area. We've invested in about, God, I don't know, I can name them though. We're in Hubble, which deals with contact lenses you can buy online. We're in a company called Candid, where you can get your teeth aligned. It's a competitor with Invisalign, and doing very well. By the way, Candid is terrific. The Real, which is hot as can be, which is for consignment of luxury goods online, direct to consumer. We have a company called Dirty Lemon, which makes drinks. Coca-Cola just made an investment in the company. You got to drink it. It's really very interesting. Everybody's excited about Dirty Lemon. And we have a company called Lucy, which reduces smoking sensation, and Billy, which is women's shavers. So lots of stuff is happening online and in consumer selling.
What about IPOs? I mean, the companies are staying private. You talked about this a little bit, but they're staying private so long, and now they're finally going out, the Lyfts and the Ubers, et cetera. Is it not such a great place for investors?
The IPO market itself?
Yeah.
Well, you know, I would exercise caution. I mean, there is to quote Alan Greenspan from 1996, there's a little bit of irrational exuberance because all the companies most of the companies that are going public right at this moment in time are consumer names. So everybody knows Lyft, they know Uber, they know WeWork, they know Airbnb, they own Slack. So there are a lot of well-known names, and that gets the public interested, and the public still have brokers, or they are online brokers, and they all want to have a piece of what they read about or hear about because their friend just made something on the last IPO, and that creates a groundswell of demand for IPOs. And we saw it here the other day with Levi's, and I guess we're going to see it very soon with Lyft. They're not focusing as much on the metrics and what the revenues are and the losses are. I mean, it's pretty significant, and that includes Uber, which is losing like $800 million a quarter and having revenues of a couple billion. So I think the answer to your question is, buying in the public offering is a leap of faith in the ability to continue this momentum that they've shown as private companies. But they're getting big, and it's hard to have those same kind of percentage growth rates. When the bigger you get, the growth rate has got to slow down at some point. You can't grow 50 or 100% a year when you get to be the size of some of these companies. So then the next issue is going to be, how will they meet their stated forward-looking statements about their first or second quarter or third quarter after they're public? Because if there is a shortfall, if there is a disappointment, I've seen it, and I think you may have seen it too. You get the night of the living dead. I mean, companies go public, and then people lose interest, and they sell them in the aftermarket because they get discouraged. So I think it's very important that if a company's going public today, or considering it, that they really have a good vision of, if I were doing it, I would make sure I have a pretty good insight of what's going to happen in the next 60, 90, 180 days, so that I'm not going to disappoint my new constituency, who is relatively fickle.
Right. I want to switch over and ask you about politics, Alan. You've been a Democratic donor leader in the party for many years. Maybe we'll start off with the Mueller report, which is timely, of course. No collusion, not exonerated the president. What is the Democrats' road forward from here?
Well, I think we're seeing it evolve. I mean, there is a lot of investigations still going on in the Congress that should have taken place a couple of years ago. And I think that while there's no collusion, and I personally, frankly, never thought there was collusion, but what is contained in this report about things that were done to prevent people from testifying, or coaching them in testifying, or preventing things from happening, we don't really know. Only our Attorney General knows at this point. And I think until that is fully disseminated, and the president said he wants it disseminated, so I'll take him at face value. He wants it as much as we do. I think the first step is to make Congress or committees of Congress aware, and then I think the general public has to see it. And no one wants the President of the United States to fail. That doesn't help any of us. But on the other hand, we want to make sure we have leadership that is not duplicitous or not doing things that are not fully disclosed. And what's happened in the last couple of years have created a lot of suspicion about how our government is being run at the moment.
So what are the talking points, though, for the Democrats and the Democratic Party?
Straighten out health care once and for all. Deal with the subject of education for all. Deal with income inequality. It's absolutely critical. We just can't have people buying $200 million co-ops and other people not being able to pay their rent.
Does that mean more taxes?
We've got to, I don't know what the answer is, but we've got to figure out how to make our system fair. And I think, lastly, I would say dealing with the infrastructure of the country. We're going to have congestion pricing in New York to try to solve our subway system, use the proceeds for the subway system. We need I'm old enough to remember Eisenhower's highway program, which changed the whole nature of the country. All the interstates came about as a result of that major infrastructure program. I think we need desperately an infrastructure which will put tens of thousands, if not millions, back to work. And so if you take those 3 or 4 things that I mentioned, if the Democrats can be clear about that and come up with a program that's believable and that can be implemented, I think we should be a shoo-in, frankly. But it's not so easy to get those messages across.
Well, then you need a candidate. And so, of course, that begs the question, which candidate do you think has the most mojo, is the best candidate, has the best chance of winning?
I think most Democrats would say they don't care who is the candidate. They just want a candidate who can beat Donald Trump. That's you hear that mantra incessantly. But I think that from my standpoint at this stage, I'm watching, I'm listening, I'm meet and greet, meeting candidates, and I think there's time to attach your horse to whatever wagon, or hatch my wagon to a horse. I think we still have time, but it's running out. We're going to have our debates starting in a few months, so we're going to start seeing people, how they perform. The jockeying is already starting, in terms of positioning. So,
have you met with a bunch of candidates?
I've met with at least 5 or 6 of them so far. I'm sure it's too many. I don't think I can meet with all of them, but I think that's the process that's going on right now. Less people raising money and more people doing meet and greet and trying to meet the people who have been active in previous campaigns.
There's talk of Joe Biden announcing and sort of creating a pre-formed ticket with Stacey Abrams. Do you think that would be a good idea?
I honestly don't have an opinion. I'm impressed by Stacey Abrams, what she said. I think Joe Biden is a very viable candidate, and I think he's clearly the front runner at this point. But I think people are going to wait till he announces and see what he does in terms of. I think that in a way, talking about Stacey Abrams, my guess is to kind of answer the issue of, is he too old, or does he have the energy in him, or what has he planned for his succession? I hope I'm good evidence of people that are over the age of 60 who can perform and have enough vitality to get up every day and do their job effectively. I think Joe is certainly. I would include Joe in that group from everything I've seen.
What do you think, Alan, about this idea, or this reality really, that the Democratic Party is at least somewhat split between a centrist wing and a left wing? Is that a problem? And do you need one or the other necessarily?
I think it's a shame that there's been a bifurcation. I mean, I found myself the other day in an interview saying, I'm not a socialist, I'm a capitalist. I mean, I have to say I'm a capitalist, but I think...
You seem like a capitalist to me.
We're all getting put into boxes. Yeah, I think that's not a helpful situation because it's kind of polarizing different segments. I think that what we want is to focus on someone who's solidly entrenched on solving some of the problems that we have that are pretty serious. The ones I just talked about are not casual comments, and we got to see someone who's got a program to programs that address these issues.
I mean, what do you make about proposals from Elizabeth Warren and Alexandria Ocasio-Cortez to increase taxes on the wealthy, and AOC's sort of demonization of wealthy people?
I think you don't need that. I mean, I came out a year and a half ago with an op-ed saying that carried interest was ordinary income, which I still believe very strongly, and I think most thoughtful people, even though they don't like it, and even though it hurts my pocketbook, but there are a lot of people who have a conscience who are concerned and would say that. I think that we need a tax system that's fair, that doesn't disincentivize people, and I think we should be open to whatever it takes to deal with some of these issues. We have to have revenues to deal with them, and I think the last tax program, except for the fact that they reduced the elimination of New York people to subtract their home interest costs and taxes and reduce tax, and the tax reduced the using
the deduction
of taxes on your federal tax. But I think we have come up with some imaginative approaches, and I hope some of these candidates have some good ideas. And just taxing the rich to give to the poor, you know, a Robin Hood mentality may not be exactly the right way to do it. I think that we got to deal with the subject, but I don't know if the ways that have been thrown out are the appropriate ones.
Right. Given that the economy is doing pretty darn well, how do the Democrats run against that? And I mean, isn't Trump going to sort of beat that drum, that look at what I've done? And is he responsible for the economy doing well?
I think we all know that the trend, I mean, Obama inherited a disaster, and it only went up, perhaps not as fast, but boy, there was an awful big battleship you had to turn around, and he and the president, our current president, rode the last wave of that improvement from the terrible times of 2008. I think he's unwinding a lot of the issues, regulations that were put in place in 2008 that brought us out of the hole we were in, and I certainly hope he has thought clearly about the implications of changing those regulations for the banking industry and the financial industry. But I think that where the economy was 3% last year, I'm not so sure it's going to be 3% this year, which is why you hear the comments out of the Federal Reserve. We're now talking about 2.5 or 2.3. The impact of the tax cuts have already been felt, and we're going to start seeing quarter-to-quarter matches without that benefit. So I wouldn't, right? Our employment increased only 20,000 last month. I don't know what we'll see what the next figures produce. So I don't think there's going to be a wave of euphoria. The president's been very fortunate. The stock market was way up. Taxes were, reduced for a lot of people. There was a lot of excitement, a lot more money in people's hands. I don't think we have the same factors operating right in 2019 and going to 2020. So it may be, I don't know.
Do you see a recession this year?
Nothing in our business would indicate a recession based on the demand for new capital, the expansion. Remember, we're dealing with all young, exciting, early stage companies that are growing at very fast rates and can employ or deploy capital very effectively. You've got a venture industry which has a lot of funds around with a lot of capital to support these companies. So I think that in my area, I think we're going to continue to see robust times. Now the IPO world has come into the picture, which hasn't been here for the last 10 or 15 years. So that's going to help people investing to feel better. But I think we need another couple of quarters to see if this economy, how much staying power this company. I mean, the economy's been going up for a long time now.
Finally, Alan, this show's called Influencers, and I want to ask you how you see yourself using your influence. in the world?
Wow, I hadn't thought about that one. I haven't thought about that before. Well, I think that I have been interested in the whole social impact element that's come to the fore, how to help people around the world. I've been very active in the developing world. I would like to use that influence. I'd like to use my influence in encouraging young people into forming businesses and building young businesses. And I hope from a political standpoint that I can, whoever is our candidate, Democratic candidate, that I can perhaps have some influence in the areas I talked about. And as I said to you even before we started this meeting, this interview, this conversation, I am concerned about the impact, the element of Google, Facebook, Amazon, and the potential monopolistic positions they have taken on, not because they set out to do it. I mean, in the 1900s, the robber barons started out to be monopolies, to control things. I don't think that's the nature. They just have grown because their businesses have grown. Just like a lot of private equity firms and venture firms have grown because there's so much money out there. I think these companies are feeding on themselves and growing and getting bigger and bigger, and they've got to find places to deploy their profits, so they go into more businesses, they have more data available, and I think it's a concern that others have expressed besides me.
All right, we look forward to your thinking on those subjects and many more ideas as well. Alan Patricof, thanks so much for joining me.
Thank you for inviting me.
I'm Andy Serwer. You've been watching Influencers. We'll see you next time.